myself Aditya P. Tripathi. I am once again here to continue our discussion on the topic of statement of cash flows. In the previous lecture of mine, I tried to explain you the basics of statement of cash flows. Now in this lecture of mine, I shall be telling you in detail what is there into statement of cash flows, what are the different methods of preparing statement of cash flows. So let us start with the discussion on the statement of cash flow. What is there into the statement of cash flow? Remember, this statement of cash flow reports the amount of cash which you have collected and paid out in different activities, that is operating, investing and financing activities for a period of time. Suppose if I take the financial year, that is 1 year. So from last financial year to the current financial year, whatever cash you have generated or whatever cash you have used in different activities, that is operating, investing and financing, this is being reported by a statement which is called as statement of cash flow. Apart from this reporting, this statement of cash flow provides us answer to so many questions. Like if I say, how did the company receive cash? What are the different avenues of receiving cash? That is being explained by a statement none other than the statement of cash flow. Another question, how did the company use its cash? What is the way of, what is the modus operandi of using its cash? Where the cash has gone? I would actually like to, cite an example here. When, there was a global financial crisis in 2008, there was a company called Lehman Brothers, which was having a legacy of more than 150 years. And if you look at the statement of cash flow of that company of that particular point of time, you will understand the way company was actually, receiving cash and using its cash. It was receiving most of cash from financing activity, that is taking loan and using it for meeting out its operational losses, which was a clear-cut, explanation, or which was a reflection of the way company was being operated. So if you really wish to know as a stakeholder that how did my company is receiving cash, simply refer to which statement? Statement of cash flow. You wish to know where the cash is being used by the company, refer to statement of cash flow. And remember, it is actually a complementary to the income statement. Some people think that it is an addition to income statement. It is a substitute to income statement. Then in that case, you are actually under a misconception that it is an additional statement. Remember, it is complementary to the income statement. It is not at all a substitute of income statement. Income statement is giving you the information regarding the profitability of the company, that whether company has made profit or it has incurred losses. It is being explained by a statement called statement of profit and loss. But if you wish to know the cash position of the company, you have no other statement but the statement of cash flow. So the statement of cash flow is giving answer to these questions, that from where the cash is coming and where the cash is going. And apart from these two important questions being taken care by this statement, it also indicates the ability of your company to generate income in the future. What is your ability? Whether company is in a position to generate income in future or not. If you really wish to know about the financial health of the company apart from profit and loss account, do have a look at statement of cash flow. So if I talk about the statement of cash flows, do remember, my dear learners, when I say flows, I mean to indicate towards inflow and outflow. It is our common understanding. When I say cash flows, you consider it to be inflows. It is a human tendency. I am saying flows, but you are considering it to be inflows. Try to understand, when I am saying flows, I mean to indicate towards two types of flows. One is inflow, another is outflow. So let us first understand what this cash flows comprises of. It comprises of two different types of flows. One is cash inflows, another is cash outflows. And when I say cash inflows, I can exemplify it with the some popular examples like selling of goods or services. You are selling goods or services, whatever cash you are receiving, cash is coming to your business. There is an entry of cash into your business. Cash is coming inside your business. That is why it is classified as cash inflow. You are selling some assets or you are borrowing from a bank. In these two cases also, cash is coming to your business. Another example of cash inflows. Remember, I have not made any classification related to operating, investing or financing activity. I am simply telling you about the cash inflows. Classification I will be telling you little later. I'm simply telling you what is cash inflow. If I'm selling goods or services, cash is coming. I'm selling other assets, or I'm going for taking loan from my bank. There is some borrowing that is also, resulting into cash inflows. I'm receiving cash from my investments. I've made some investment into some bonds, some debentures, some fixed deposits. I'm receiving some cash from my investment, return from my investment. It can be interest, it can be dividend, whatever nomenclature you assign, but cash is coming to your business. So cash inflow comprises of any transaction which results into the influx of cash, or you can say receipt of cash. If cash is coming to your business, inflow is there, then obviously we call it cash inflow. Opposite to it, if we talk about the cash outflows, if any transaction is resulting into the outgoing of cash, that is being called as cash outflows. If you are paying your operating expenses, making payment of salary to your employees, that is resulting into cash outflows. You are having some expansion programs, you are having some expansion into your business, you are spending some money for that is resulting into cash outflow. You have taken some loan from some banks or some other institutions, some financial institutions, you are repaying that loan, that is also resulting into cash outflow because cash is going out. You are paying your owners a return on investment. Your owners are demanding for dividend. You are paying dividend to the owners of the business as a company. Then obviously this dividend is resulting into the cash outflow. So it is very simple to identify that which transaction is resulting into cash inflow and which one is resulting into cash outflow. So with any transaction, if you are receiving cash into your business, if cash is coming inside the business, that is being called as cash inflow transaction resulting into cash inflows, and if it is opposite to that, cash is going out, it is classified as cash outflow. Having understood this very concept of cash flows, which comprises of cash inflows and cash outflows, it is very important for you to know what are the different activities, what is the classification by the Ind AS 7. So Ind AS 7 says that cash flows are required to be essentially, they are supposed to be classified into three broad categories, which I had a mention in the previous lecture also. Cash flow from operating activities, from investing activities, and from financing activities. So you can call it as OIF, that is operating, investing and financing in short. Now let us talk about the match classification. What is operating activities? See, the term itself is indicating any activity which is related to your operations. What is your core operation? What is your mode of operation? What is your basic business in which you are into? So transactions and events which enter into the determination of your net income, that is called your operating activity. So suppose if I am into the purchase and sale of goods and services, that is my core operation. If I am buying and selling shares and debentures, I am a broker, my basic business is broking. So that broking agency job, whatever amount I am receiving, that is my operating activity, and whatever expenses I am incurring, that involves the operating activities of mine. So remember, any transaction or event which enter into the determination of my net income as a business enterprise, that is my operating activity. I hope it's clear with the operating activities. If it is so, I can move on to the next activity, that is investing activities. Now the term itself is indicating, as a business enterprise, if you are making investment somewhere, so from investment either you will be receiving some money on account of returns or the repayment, or when you are investing, the cash is going. So cash out, if I talk about the cash outflow in terms of investing activities, whatever money you are investing into the different investment options, they are being called as cash outflow under investing activities, and whatever return or repayment you are receiving from your investment, that is being classified as cash inflow under investing activities. So transactions and events which involve the purchase and sale of securities, property, plant, equipment and any other asset. But remember, these assets should not be held for resale. Some people say that, sir, in book it was written that if I am purchasing and selling any securities, property, plant, equipment and any other asset, that is classified as investing activity. But in certain cases, it may become your operating activity. For instance, suppose I am buying a property for my business. My main business is buying and selling some goods, and I bought a property for my business. In that case, this is my investing activity. But what if my core business is buying and selling property? In that case, that property cannot be classified as my investment, because whatever property I am buying, that is my inventory, and purchase of inventory is classified as operating activity. So my dear learners, don't learn it by the type of security or type of the asset in which you are investing. Remember, if your business, what is your type of business? If your business is of dealing in property or shares and debentures or plant and machinery, then in that case the purchase of plant is being classified under the operating activity, because you are buying those plant and machineries or building or property for the purpose of resale. So if there is some investment which is not being held for the purpose of resale, then only you can classify it as investing activity. Otherwise, it will go into operating activities. Then comes financing activity. Apart from operating and investing, third activity is that you shall actually be going to your bankers, to your funders, from where you are arranging the funds. So it can be the equity shares, it can be debentures, it can be bank loan, it can be any kind of loan with which you are taking care of your finances. So your finances are being included here. So transactions and events whereby the resources are obtained by your company. So either you will be, here also comes the cash inflow and cash outflow. Either you will receive money from your different sources of finances. Say you have issued shares or debentures, you have taken bank loan, inflow. If you are repaying your debt, cash outflow. If you are paying dividend to your shareholders, cash outflow, but under financing activity. So the same term dividend, when you are receiving, it is coming from your investment, classified as cash inflow from investing activities, and same dividend, same term, same transaction dividend, when you are paying to your shareholders, it is being classified under the head of cash outflow under this financing activity. So that is cash outflow under the broad classification of financing activity. So my dear learners, it is very important for you to first understand that what are those three classifications of operating activities, investing activities and financing activity, which is also called as match classification of cash flows, right? Now if I talk about the operating activities, I would like to show you the classification of cash inflow and cash outflow in each of the match classifications. Say for instance, if I start with operating activities, under cash inflow you will have sale of goods or services, you will have sale of investments in trading securities, because here, mind here, when I am talking about the securities, I am talking about the trading securities, that you are trading into those securities. Those securities are regarded as your stock. Interest revenue, if you are receiving some, dividend revenue, if you are receiving some from your operations, because you are basically a business of trading in securities, you are buying and selling securities, say shares or debentures. In that case, interest will be your operational revenue, dividend will also be your operational revenue. By default I try to intentionally I try to take this example, because most of the time students feel that interest revenue and dividend revenue, they should go to financing activity or they should go to investing activity. Remember, you need to first check what is the nature of business. If your business is of dealing into securities, buying and selling securities, then obviously whatever interest or dividend you are receiving, that will be your operational cash inflow. If I talk about cash outflow for such kind of business, inventory payments, you are buying some inventory, cash outflow, you are making payment of some interest, cash outflow, you are paying wages, utilities, rent, taxes. So whatever cash which is being paid to take care of your business operations, that is being classified under the head of operating activities, and that too as cash outflow. So we have to first, before we start preparing statement of cash flow, first ask yourself, be very sure about the type of company you are dealing with and try to understand what is the core operation of that business. Then comes investing activity. Under that investing activity, if I talk about the cash inflow can be from sale of plant or any other asset. You had purchased some plant or machinery, you have sold it out, some cash has come to your business, that will be classified as cash inflow. This will be more clear when we will be solving numerical questions. pertaining to these different activities. But yes, for understanding we should know that what can be the possible sources of cash inflow under the head of investing activities. Sale of securities other than trading securities. Now mind here, if you are selling your securities and they are your investment, you haven't bought those securities for the purpose of resale, then obviously they are your investment. So any cash which you are receiving by the way of selling those securities, that will be classified as your cash inflow. Collection of principal amount on loans. You have given some loans to some other people, loans and advances, and you are receiving some principal money out of it, then obviously it is your inflow under the head of investing activities. Now under the same head, if we try to talk about cash outflow, there can be purchase of plant or machinery or any other asset. There can be purchase of securities other than trading securities. Mind here, my dear learners, if it is a trading security in which you are doing the business, that will be classified under the head of operating activities. If it is other than trading securities, then obviously this is for the purpose of investment, and since it is an investment, it should be classified under the head of investing activity. So be very sure that when I am classifying a cash inflow or cash outflow under the head of investing activity, then obviously I should be sure that this is my cash inflow and this is my cash outflow. So before identifying the very nature of cash inflow and cash outflow, we should be sure about the broad activity of that particular transaction, whether it belongs to operating activities or investing activities or financing activities. I shall be telling you while attempting the numerical problem the way we start our journey of statement of cash flow from the balance sheet. It is the point where we have to touch upon the every point of the balance sheet, be it liability side, be it asset side. So I would like to give you a reflection of that here itself, that suppose if I talk about the asset side of the balance sheet. On the asset side, apart from your your current asset, all other investment like land and building, plant and machinery, furniture and everything, that is being classified under the head of investing activity. If you talk about the current asset and current liability, they are basically for running out your business, so they belong to operating activity. So on the asset side, current asset is going to operating activity, non-current asset they are going to investing activity. On the liability side, all non-current liabilities, they are being classified under the head of financing activity, and current liability goes to operating activity. So you have to actually take care of each and every item of balance sheet. So while preparing the statement of cash flow, it is the balance sheet which becomes the base. So this is the point from which we start our journey of preparation of statement of cash flow. Without balance sheet, you cannot prepare a statement of cash flow. So that is the point where we classify that, see, when I am dealing with operating activities, I shall only be looking at the current asset and current liability, and to the max the profit and loss account balance. When I am talking about investing activity, I will look at the asset side of the balance sheet, and when I am dealing with the financing activity, I am looking at the liability side of the balance sheet. So this is as simple as that. Now coming to the financing activity, if I talk about the inflows under this head, if you have issued your own equity shares or you have issued debentures, you have taken some loans, they will be classified as cash inflow under the head of financing activity. And if I talk about the cash outflow, obviously the payment of dividend, repayment of principal amount on borrowing, or if you are buying back your own equity shares, that also is being classified as cash outflow. Purchase of treasury stock, so if you are doing so, that is being classified as cash outflow. So with this, my dear learners, I tried to give you a broad classification of different activities, that is operating, investing and financing. To sum it up, I would like to classify it like this, that under cash inflows, the cash is coming to the business. If we take business as a pot in which the cash is coming, if you look at the top side of this diagram, you find the cash inflows. Cash is coming inside the business from these three activities: operating, investing and financing. It's a depiction of the way the cash is coming to the business. And if you look at the downside of the lower side of this diagram, you find the cash outflows, that too from these three activities, where the arrow is indicating that the cash is going out, whereas the upward the upper side of diagram shows the way the cash is coming, because arrow is indicating that business is witnessing cash inflow from these three activities, that is operating activities, investing activities and financing activities. And from the same activities, you are having your generation of cash, and your cash is being used or lost under these three activities only. So this was a broad classification of the statement of cash flow. Now I shall be coming to the methods of preparing statement of cash flow. At times students are asking me, sir, which method is best? I would suggest that both the methods are good, because by both the methods, by either it is direct method or it is indirect method, your destination remains the same, you reach at the same point. So both the methods are good. Now it is only a matter of understanding that why LODR guidelines suggest that statement of cash flow need to be reported by the company, but that too as per indirect method. I shall be telling you what is the reason behind having this kind of condition, this kind of mandate that you will have to prepare your statement of cash flow, that too as per indirect method. But prior to that, we need to first understand what are those two methods, direct and indirect method, and what we do into them and how they are different with each other. If we talk about the direct method, in this method, we take gross inflows and we take gross outflows. We have the same categorization, same classification of different activities, operating, investing and financing. But what we do, we take up gross inflow from operating activities. Suppose if we are having all the receipts, so we actually pick up all cash transactions of inflows and outflows. We classify them into these three activities: operating, investing and financing. So here we don't consider the effect of accrual or matching principle. We are trying to eliminate the impact of accrual and matching principle, which is actually the very basis of preparation of statement of profit and loss or profit and loss account. So in direct method, in this direct method, what we do, we take up gross inflows and we take up gross outflows. We are simply finding the difference between the two and then reporting either the cash is being used or cash is generated from that specific activity. We don't bother about the impact of outstanding, prepaid, accrued, unaccrued incomes and expenses, which means we are eliminating the impact of matching and accrual principle. Whereas in indirect method, we start our journey from the profit and the figures of profit and loss, which is being reported by profit and loss account, and there we are on a drive to eliminate the impact of non-cash, non-operating items. Rather, I would say we nullify the impact of non-cash, non-operating items. When I say nullify means we are trying to eliminate the impact of those non-cash, non-operating expenses or incomes. I preferably call it non-cash and non-operating items. Why I am saying items? Because they may belong to either of the category. It can be either expenses or it can be income. So we are on a nullification drive of eliminating the impact of non-cash, non-operating items under this method of statement of cash flow. This is the most popular method of preparing statement of cash flow, and in most of the examination question, our expectation is that student must prepare statement of cash flow as per this method, because it is little difficult also, and in practical life you are not provided with the cash transactions every time. You are provided with the income statement and balance sheet, and with that you have to infer, you have to draw inferences that this might have been the possibility. In this way the cash might have gone or the cash might have been received. So in indirect method, we don't bother about the gross figures of cash receipts, cash inflows and cash outflows. Rather, we start our journey from the figures of profit and loss reported in the profit and loss account or in the balance sheet, or sometimes it is given as an adjustment item. So in indirect method, what we are doing, we are taking up the incomes and also the change in current asset and current liability. I shall be showing you the way we have to prepare it. So in direct method, if I tell you what it discloses major classes of gross cash receipts and gross cash payments. So it is very simple. It is in one way or the other, you can say it's a different way of representing or presenting your cash book. In your cash book, you were having receipts and payments, but that was not in a classified form, that is operating, investing and financing. Here we provide the gross receipts of cash and gross cash payments in a classified form, that is operating, investing and financing activity. Whereas in indirect method, what we do, we take up surplus or deficit which is actually adjusted for non-cash and non-operating items, and at times deferrals also. So we have to eliminate that limitation of your balance sheet and profit and loss account, that while preparing statement of profit and loss or profit and loss account, we were having an assumption of accrual, and this accrual concept was being considered while preparing statement of profit and loss. Here we have to eliminate that impact, that we have to eliminate the impact of non-cash transactions, non-trading transactions, deferrals and accruals. And how we do, I'll be telling you while attempting the numerical questions. Now let us have a look at the statement of cash flow as per direct method. If you look at this format, this is given for 2 consecutive years, cash flow from operating activities. If you look at this broad classification, it is having receipts, wherein all receipts, all possible items of gross receipts by the company is being indicated. Say for instance, for this company there is a fee, fine, penalty, licenses, other revenues, and apart from this we have some payments also, employee cost, other expenses. So after subtracting these payment items from the receipt, because payment is being indicated under bracket indicates the minus, the amount to be subtracted or to be deducted, and it is resulting into the net cash from operating activities. My dear learners, always remember, if your expenses are greater than that of your receipts, what happens? The resultant value is also negative. So in that case, we don't write net cash generated from operating activities, rather we shall be using another term. We call it net cash used in operating activities, or some people write net cash lost in operating activity. I would say we should not write the term lost, we should write net cash used in operating activities in case your cash flow from operating activities comes in negative, which means your receipt is less than that of your payment, or you can say your payment is more than that of your receipts. After this comes cash flow from investing activities. Under this activity also, whatever inflow and outflow you have, you will report and the net item will come. Eventually you will go for cash flow from financing activities. Whatever receipts or payments are there, inflows and outflows, that is adjusted here, and you report either cash generated or cash used from these activities. After these 3 activities are, their calculations are over, we term this the sum total of the aggregate of these 3 activities into net increase or decrease in cash. Either it is increase in cash or it is decrease in cash, and the moment you add opening balance of cash into it, you automatically get your closing balance of cash. This is the beauty of this statement of cash flow, that while attempting the question itself, you are sure that whether your answer is correct or not. So this is the way we prepare the statement of cash flow as per direct method. In the next lecture of mine, I shall be telling you about the indirect method of preparing statement of cash flow. But here, my dear learners, do remember that you must be aware of both the methods. Don't ignore the direct method also. So we shall be attempting some questions as per direct method, but yes, major part of our discussion shall go ahead with the help of indirect method of preparing statement of cash flow. So with this, I tried to give you a very brief outlook or idea about statement of cash flow, and in the subsequent lectures of mine, we shall be attempting various questions, cases of this statement of cash flow. I hope you must have enjoyed today's lecture of mine. Thank you so much.